What do you want to keep out of your portfolio? Perhaps you would actually like to own some gold, but Simon Constable says take it out. Commodities set for a deep drop, you assert in your column, Simon.
If we go into recession.
Okay.
And it's looking more and more likely that we will be going into recession.
So lay out for the person who's sitting on some money in the bank, perhaps has a nice stock portfolio, and is wondering, well, why should I get out of commodities?
Well, there are three things that happen during a recession. One is you see manufacturing start to collapse. And manufacturing, if you think of that, the whole economy goes down in a recession, well, manufacturing goes down much more. And the raw materials to make the manufactured goods, they go really, really deep down.
Right.
So that's the reason you want to get away from them. And there are three reasons why that happens. The first is that in a recession, money flies into U.S. Treasury bonds and U.S. dollars, and that sends the dollar up.
They can't fly any faster than they're flying in right now, my friend.
Well, they could, because yields can go. I mean, people say, yields can't get below 2%, and then they have, and they're now at 1.5%, and they could go to 1.4, they could go to 1. So never say never. I mean, even Bill Gross over at PIMCO has been saying, we're going to have, whatever, it's going to go up. But we've been seeing it go down, and that will happen in a recession typically.
Right.
So you'll see the dollar go up, interest rates go down. So the dollar going up, when everything's priced in dollars, that means the price of the goods goes down.
So take us through a specific example. You know the market so well.
So
Freeport-McMoRan, do I want to buy or sell that stock?
Well, that's a great commodity stock. I mean, it's got gold,
there
it's got
you see the
copper,
chart right there, yeah.
And it's got, that's a 12-month chart, and it's also got molybdenum, which goes into steel. You would expect that to do very badly during a recession. And the dollar going higher would make the cost of those, or the price of those commodities go lower. You also see demand go down. That's the definition of a recession, demand going down. So the demand for all those commodities will go down. So it'll be lower price and lower volume.
But let's listen to the other voice in our head, okay? Shall we? I know maybe we hear multiple voices, but
quick, call the guys with the white coats. Dennis has voices in his head.
But the other voice says, "Hey, China might be slowing a bit, but still a voracious consumer of end products and the commodities that go into them."
That is true. But here, commodity markets, like all markets, are made at the margin, right? So it's that extra bit, it's that last unit that's sold that determines the price for everything else. And remember, we are still the largest economy in the world. A quarter of everything in the world is consumed by us here in the US. That's important. People forget that. People keep saying, the US, it's not what it was. We're still a massive economy. Right. We consume a lot of stuff.
And so the oil sector, we see oil down in the $80 a barrel range. Now, these should be pluses for the U.S. economy. So
they are symptoms. They are symptoms, right? If you have a job and you want to go to work, you're going to need to buy gasoline, which primarily drives the demand for oil. The fact that it's low is a symptom of a slowdown, not a good thing.
But is there not a virtuous cycle where lower commodity costs help improve demand, where access to things is more available? Yes.
That's how we get out of a recession. We haven't quite gone into it yet.
There's the crude oil
There's the
chart.
Crude oil. We haven't quite gone
steep.
into it. But it's also pretty, that's steep lately going down. We haven't gone into the recession yet. As we come out of the recession with low, typically that's what happens.
Wait, so Simon, are you telling us here that we are going into recession? Is that your...
Well, that's people I have talked to say, look, we've got some really bad economic data. The Economic Cycle Research Institute, which claims a perfect record on they've never had a false call, and they've never they've never called it when it wasn't going to happen. They say we're going into a recession imminently. So I tend to think that's a good track record, and they say we've never had this low level of job creation like we had today without having a recession. Never. The word never. It has never happened.
And of course, the number of the numbers show how we're so similar at this point in the cycle to a lot of the behavior in the Great Depression. So
yeah, absolutely.
Perhaps we need Jerry Seinfeld.
Well, I mean, the thing that you can do, though, is you can try and keep your wealth by plucking out all of those commodity stocks out of your portfolio.
Okay, Simon, thank you.